Good evening, everyone. Welcome to the channel. Today I am going to talk about Skb Bio-B interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Sichuan Kelun Biotech Biopharmaceutical Co., Limited, offers a diverse range of businesses and services in the biopharmaceutical industry. The company's product pipeline includes novel drugs for oncology, immunology, and other therapeutic areas, ADC, antibody-drug conjugate, therapies targeting various solid tumors, monotherapies, and combination therapies for treating advanced HER2 plus solid tumors, immunotherapy franchise with PD-1 EMOB, tagetanlimab, recombinant EGFR human mouse chimeric EMOB, cetuximab none, selective RET inhibitor, a FER100, small molecule STING agonist, ATWO 196. The company also provides licensing and collaboration arrangements with several international partners, including Merck Sharp and Dome LLC, Harbor Biomed Therapeutics Limited, Windward Bio AG, and Ellipses Pharma Limited. The skyrocketing of Skb Bio-B stock price, a year of breakthroughs and growth in the past year. Skb Bio-B's 69.90 stock price has surged by an impressive 187.97%, driven by a series of significant news events that highlight the company's promising developments in its drug pipeline, financial performance, and analyst outlooks. Key factors contributing to this remarkable growth include major licensing agreements, such as the collaboration with Hengrui Pharmaceuticals for Skb 378, which has the potential value of up to USD 0.97 billion. Analyst ratings have also been a significant driver, with CMB International and CLSA maintaining buy and outperform ratings respectively while raising target prices. The advancement of key drug candidates like Skb 164 and Skb 378 has garnered substantial attention from analysts, who project sales between RMB 0.8-1 billion in 2025 for Skb 164. The company's breakthrough therapy designation for sacituzumab turimotin in combination with tagetanlimab is also expected to accelerate its review and potential market entry. Furthermore, significant capital placement in June 2025 has provided the necessary funding to support the company's pipeline strategy and accelerate global clinical development. Improved financial performance, including a net profit of RMB 310.23 million in the first half of 2024, has also contributed to the positive sentiment towards Skb Bio-B. The broader industry outlook, driven by innovation upgrades and internationalization, has further fueled the growth of companies like Skb Bio-B as the innovative pharmaceutical sector continues to experience strong gains. It is likely that Skb Bio-B's stock price will continue to rise in the coming months. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, upfront payments from partners such as Windward Bio and commercial sales of sac-TMT and other products have been significant contributors. Expansion into new markets, increased sales to over 1,000 hospitals, and marketing campaigns reaching tens of thousands of healthcare professionals have also driven revenue growth. Additionally, obtaining authoritative endorsements for products, establishing a fully fledged marketing team, and inclusion of products in medical insurance have all contributed to the company's revenue growth. On the decline side, decrease in milestone payments from license and collaboration agreements has been a major factor. Less payments received from MSD pursuant to their collaboration agreement in 2025 has also contributed to the decline. Furthermore, a decrease in sales of pharmaceutical products has resulted in revenue decline. Net income experienced a significant decline of 38.7% over the period under review. The decrease in net income was also reflected in the reduction of RMB 62.6 million from RMB 94.4 million to RMB 31.8 million. Furthermore, the net income decreased by RMB 455,401. The primary reason for this decline in net income is attributed to a decrease in profit margins. Several factors contributed to this decrease, including a reduction in government subsidies and an increase in administrative expenses. Additionally, there was a decrease in interest income from bank deposits and an increase in net losses on disposal of property, plant, and equipment. Moreover, the company incurred higher costs due to an increase in cost of inventories recognized as an expense and significant research and development expenses. These factors collectively led to a decline in profit margins, resulting in a substantial reduction in net income. The company's financial performance indicates a significant issue with its ability to generate positive operating cash flow. Despite efforts, the company continues to utilize substantial amounts of cash from operations, totaling RMB 373.2 million in the given period. This trend suggests that the company is struggling to convert its earnings into actual cash, posing a challenge for its long-term sustainability and growth prospects. The company's debt level and interest expenses have undergone significant changes. Notably, the non-current liabilities, specifically lease liabilities, have increased by RMB 2118 from RMB 41,842 to RMB 43,960. This increase is a result of the rise in right-of-use assets by RMB 4,368,000. The interest expenses on lease liabilities have also seen a substantial jump, increasing by 166% from RMB 1,140 to RMB 3022. Furthermore, the interest expense on lease liabilities to Kellen Group has risen from RMB 960,000 in 2024 to RMB 2,779,000 in 2025. In contrast, the interest element of lease rentals paid decreased from 2454 RMB 0 to 243 RMB 0. However, this decrease is overshadowed by the significant increase in finance costs, which rose by 20.5% to RMB 3 million. Overall, these changes indicate a notable shift in the company's debt level and interest expenses. Management is optimistic about the company's outlook, with a focus on short-term growth and long-term innovation. Key strategies include launching new products in China and filing for approval of a FIR 100 in 2025. The company will also commercialize pipeline products based on expected approval timelines, focusing on breast cancer, lung cancer, and other tumors. In terms of research and development, management aims to deepen R&D innovation, particularly in key technology areas such as pioneering projects and antibody-drug conjugates, ADCs. This will enable the development of innovative drugs with differentiated advantages for internationalization. Globally, the company will pursue a flexible strategy to capture commercial value in major markets through synergistic license and collaboration opportunities. This includes expanding global footprints and strategic partnerships to maximize pipeline value through out-licensing collaborations. There were no notable acquisitions or divestitures in this period. The company's financial strategy focused on organic growth and internal development rather than external transactions. The company's financial summary reveals a notable trend. Notably, there is no record of dividend payments made by the company. Furthermore, there is also no indication of any share buybacks. This suggests that the company has chosen to reinvest its profits rather than distributing them to shareholders through dividends or repurchasing shares on the market. That concludes the financial summary for Skb Bio-B. Feel free to comment below, and I will be happy to answer them when possible.